Good afternoon, everyone, and welcome to Breaking Boundaries, Unleashing Organic Growth with Non-Traditional Strategies. Today, we hear from Nathan Baumeister, CEO and co-founder of Z-Suite Technologies, and two bank leaders in an engaging conversation on how they have unleashed organic growth on both sides of the balance sheet after embracing unconventional industry verticals, forging strategic partnership, and leveraging cutting-edge technology. We thank you for joining us today. My name is Lexi Grindstaff. I am the Director of Business Development here at Bank Director. Today, this webinar is brought to you by both Bank Director and Z-Suite Technologies, an information resource to the financial industry. Since 1991, Bank Director focuses on the strategic issues most fundamental to a bank's CEO, senior leadership team, chairman, and independent directors. Z-Suite Technologies is a financial technology company that equips banks with digital escrow and sub-accounts to attract clients in specific commercial verticals. Banks partner with Z-Suite to gain low-cost core deposits, operate more efficiently, and to expand their commercial portfolios. So before we get started with the conversation today, let me share just a few things. First off, we can't hear you. You have joined this webinar in listen-only mode. We recommend that you use the slide bar on the bottom of your screen to put the presenters into full screen mode today. If you have any questions for our speakers, please note those by clicking the Q&A button found on the right-hand side of your screen. You can do this at any time throughout the presentation, and once our presenters have finished, we will have a Q&A period where we'll go through and answer as many of those questions as we can. There is no need to take detailed notes today, as the presentation will be shared with all attendees via 24 hours via email, and then that will also be available on bankdirector.com. If you have any technical issues today, you can note those using the moderator chat feature on the right-hand side of your screen, and we will do our best to take care of it. Finally, the opinions expressed in this webinar are those of the individual speaker only and do not necessarily reflect the opinions of the other speakers or of the entities with which the speakers are associated. So now it is my pleasure to introduce our speakers for today. First, Nathan Baumeister is the CEO of Z-Suite Technologies. With more than 15 years of experience in the technology industry, Nathan has served in leadership roles in multiple companies, supporting the long-term success of banks and credit unions. Nathan is a solutions-oriented leader who believes in high-performance culture cultivation and locally driven decision-making. Welcome, Nathan. Today, we also have Tyler Bender with us. Tyler is the president of Midwest Regional Bank, where he began his career with the bank in 2007. Prior to becoming president, Tyler was a senior vice president, and he also serves on the bank's board of directors. Tyler is a member of the 2020 40 Under 40 class of business leaders in St. Louis, as awarded by the St. Louis Business Journal. Welcome, Tyler. And lastly, today we have Jay Tooley. Jay is Leader Bank's president since 2020, and Jay has guided key divisions of the bank, including residential lending, business and government banking, information technology, product development, and marketing. Under his leadership, Leader Bank's assets have grown organically to over $4 billion and has become the second largest home purchase lender in Massachusetts. So with that, Nathan, Tyler, Jay, please take it away.
Excellent. Well, thank you so much, Lexi, and for all of you that are attending. I really appreciate you taking the time to be able to listen in on this conversation that I get to moderate between both Tyler as well as Jay. As we think about the different ways to grow financial institutions, there's always a lot of talk about M&A, and that's obviously a way to grow that has been used quite a bit. What we wanted to do is open up the conversation and how other creative formats of growth could be used from an organic perspective. We're excited to be able to get these two gentlemen to join us to be able to talk about two very different institutions in two very different parts of the country who have really utilized a lot of different strategies, some successfully, maybe some not as successfully, but in the end to find ways to amazing success. So the first thing that I would ask both of you to do, and Tyler, you can go first, and then we go with Jay, is just give our audience today a little bit of background and context of your financial institution so that as we discuss the different strategies that you've tried to go about and shared learnings that you'd want to give to your fellow bankers that they might be able to follow along.
Yeah, I'd love to do that. And thank you for having me on here. I'm really pleased to be here. Our bank is based in St. Louis, Missouri metro area. It's our bank over the last decade and a half or so has experienced a lot of growth organically from the initial acquisition we made in 2007. A group of small investors bought a bank called the Bank of Otterville out of Sedalia, Missouri, which was a rural, very small, $19 million community bank. Once that acquisition was made, we then moved the charter into the St. Louis area, and we knew our leadership team was very commercially focused. We all have a commercial banking background, and that this bank, coming from the rural community into the metro market, would service that would have to change a lot of the way it operates and the way it has in the previous years. The bank originally was founded in 1894, so between 1894 and 2007, $19 million. Between 2007 and today, we're right at $1 billion in asset size. And all that growth, for the most part, like I said, has been commercial, and I'm utilizing different commercial tools we've developed and kind of either strategically went after or developed in-house or kind of fell into at times, out of necessity, depending on what the markets kind of threw at us.
Great. Thank you so much, Tyler. Jay, how about you?
Thanks, Nathan. Thanks, Bank Director, for having me. Pleasure to be here. So, yeah, quickly on Leader Bank. So we started as a de novo bank in 2002. So we are on our 21st year in operations, and sort of started as a family kind of founded and run bank. My father started it, and I've been here 17 years. We're a little over $4 billion in assets. We've grown organically. We're generally a branch light organization. We only have about 6 locations. And our big business lines is we're really big in mortgage lending, and then we've grown the deposit base through business banking and really specializing in specific verticals. And then throughout the years, we've sort of rounded out the other parts of the bank: commercial real estate lending, securities-based lending. And so I would say in a nutshell, we don't do everything. We're deliberate about the products and services we do offer, but we do try to go deep in them when we do them. And so just try to specialize a little bit more.
Yeah, I love that. And Tyler, one of the things that you mentioned in your opening comments was that a lot of what you ended up doing from a growth perspective almost seemed more driven by necessity. And I would love to hear a little bit more commentary on maybe the importance of waiting to figure out how to grow when a need arises versus going out and trying to force a need to be fulfilled.
Yeah, it's, when we started out, we knew the commercial side was going to be the most important thing. So we developed our commercial base, our commercial clients, and, we knew we were going to offer, the standard, business loans, the acquisition loans, the commercial real estate loans. We knew we could do the bread and butter stuff. But then as time went along, those clients all have unique needs and unique things were thrown at us and opportunities, quite frankly. And so as we grew a little bit, one area we kind of looked at a lot of was, we had a lot of small businesses in our area who really wanted to expand a little bit, but their credit box might be slightly different than an established business. So we wanted to figure out how to work with them more. So that's when we first did our some SBA lending, some 7A loans, and then after that, we kind of continued down that path. Learning more and more about that. So we kind of realized, hey, this could be something that could be really good for us. At first, we didn't know what we were doing. We found a small company to help kind of outsource the back office, the approvals and all that kind of stuff. And then after we closed that one, we realized, okay, that's good. So we found another one that kind of came in the door. And beyond just doing the standard, commercial real estate deals with, 25, 30% down, we're able to start doing a lot more startups and acquisition notes and be able to really grow it from there.
Yeah, oh, I love that. Thank you for sharing that. And I think it's tied a little bit, Jay, to some of the comments that you said that you have overtly decided not to do everything, but rather have a deep level of specialization. I know that there's a lot of people who think that that's generally counterintuitive because, hey, if someone's going to come that wants to do business with me, I'm going to do business with them. So how is it that you kind of ended up deciding to go down that specialization route rather than more of a mass market approach?
Great question. I mean, I think it was more by happenstance as a newer bank. We never had the benefit of a incumbent deposit franchise that was stable and sticky and passed on from generations. So as we were thinking about how to grow deposits, the only thing that comes to mind is, well, how are we going to stick out from the others? Because if we just offer the same exact thing everyone else does, that's still not enough to pull depositors over. So that then, you just start reverse engineering, like, okay, what are some of the specific niches that would fit well within our business strategy that if we really focused on and tried to better serve those clients, they would find a reason strong enough to make the move. And for us, since we were such a big mortgage and real estate kind of lender, we sort of tried to say, can we use that as a strength and move that on to the deposit side? And I think that's the main thing for us as we're thinking about how to compete. It's less about offering every service that someone potentially may need. It's more about how do we add a deeper level of service to a client we know we already have that will need it.
Yeah. And when you do that, one of the nice things is that the cost of acquisition is a lot less, right? Since you already have that relationship and how you can build on that profitability. Both of you, are talking about doing things differently, doing things that perhaps you don't necessarily know how to do. I think Tyler used the words like, we didn't know how to do it when it was the first time, but we did it anyways. And there's two areas that I'd love to hear some commentary, and we could start with either of you. Two words, curiosity and courage. What does that play into how you all went about looking to grow your bank? And the other one is support from your board. As you were going about trying things that perhaps you've never done before, or that some might say, well, why are we going to say no to all these customers through this specialization? So I would love just to hear a little bit about your journey and maybe even a story or two where that came up, where you could see kind of that curiosity, that courage, or the need to have the support from your board as you're trying these new and different tactics.
Well, I know for us, curiosity and courage go hand in hand. You can be curious all you want, but take anything to the next level, you have to put yourself out there. And the courage part is just doing. It is going out there. It is giving it your all. And going back to what Jay says, focus. It's a lot easier to have courage if you're focused. You put your team behind it, and everybody's working on the same mission, on the same page, towards the same target. So for us, where we put that into action, and it required some board approval on it, was going back to the SBA side of things. We initially got started with a few deals here in the localized market in St. Louis, and it worked really well. But we knew we could go bigger with it. We could take this to the next level, but we weren't really sure where we would go with this. So our curiosity was kind of spiked when we started talking to a lot of other, individuals in other markets to see and finding out what was going on in their small business areas. So eventually we decided, hey, let's step out of our comfort area here and look at other potential markets to take this SBA program to. So we sat down with our board a bit and kind of got their input. Like, do you guys and gals feel comfortable? We're a St. Louis-based bank. We're all St. Louis-based bankers going somewhere else. We've all seen some of the issues banks have had in the past going to other markets that they're not originally, based in and know real well. But since this was an SBA program, a government, there's that government guarantee there. We knew we had really good underwriting standards. We had the only thing we didn't know is if we could find individuals in other markets to be able to carry out this program. So our curiosity, we started exploring other potential markets to jump into. And as we dug deeper and deeper, we found there was some talent out there that we could, go out there and try to court to bring in to help us in those markets. And we did make the leap. At first, it was really, kind of nerve-wracking because we had to build out all our infrastructure, build out all our credit systems and our monitoring, quite frankly, because you don't want to go somewhere else and do, new deals in a new market without knowing what you're getting into, and a good system to follow up on things, and if there are any kind of credit issues, to be able to handle them from afar. That system, it evolved over time. It all wasn't overnight, but slowly and surely we ended up doing 7 LPOs in 4 different states besides Missouri, and it's really worked out quite well for us.
Yeah, that's a great story, success there. I'm sure there's a lot of blood, sweat, and tears between the beginning to that end that you shared there, where you are now.
Oh yeah. Oh yeah.
And Jay, how about you?
Yeah, I mean, curiosity and courage. I love those phrases. I haven't heard them like that just together, but it makes a lot of sense. I would add, I think, like alignment with the board and preparation are really important, so that when we are bringing a strategic initiative, it doesn't seem random. And like sometimes having the context and the background knowledge is almost as important as having the opportunity itself. And so I think one thing we try to do with the board is, as we are seeing strategic opportunities, or as we're thinking about potentially strategic opportunity that's coming in the future, is start prepping them and planting the seeds. Because some of these decisions, they take multiple meetings and multiple conversations for it to make sense to somebody. You can't expect a huge strategic decision to be blessed after like a 10-minute presentation. That's unrealistic. And so we try to be really aligned with them. I would say the other thing is, with a lot of these, we're not swinging for the fences. All of these initiatives can start small. And I think one of the great things in financial services, like ultimately you need big systems and technology and stuff like that. But a lot of the time it starts with hiring a person, right? There's going to be a person that's going to start this group, that's going to build this product, that's going to build that service. That's not a huge investment for a bank. And so, I always start with that. Like, okay, we're going to work hard to identify the best talent that will help us start our insurance subsidiary, as an example. And once you bring that person on who has that experience, has that track record, you've really actually de-risked the situation, for the company and for the board. And then I would say the next thing that we spend a lot of time in is like, what is a reporting system and what are the metrics we're going to output every month? And this is another way to de-risk it, because very early on, you're going to start to see if there's problems and if there's successes, and the board is going to observe that with you. So it's not like we're going to the board and saying, we want to spend $10 million and do this and that we've never done. It's, we want to hire one person and we want to build it from there and grow and grow and grow. And so we've used that tactic for a lot of the new businesses we've started, such as insurance, securities-based lending, 1031 exchange, et cetera.
Yeah. It's funny that both of you in your commentary, it did seem like as you went about thinking about various different tactics, it wasn't, I'm going to go from doing no SBA loans to I'm going to be doing thousands of SBA loans from one day to the next, just taking that first step. And both of you talked about that first step being getting the right people in place who have perhaps the knowledge that you don't have, who have experience to be able to come into the bank and de-risk the whole situation. So I'm curious, how do you go about finding those people or recruiting those people or getting them excited to join the bank, whether it's because they're outside the industry and you're trying to get them into the bank, or maybe they're already very successful in another department or division at another financial institution or whatever it might be. But seeing as that hiring and getting the right people have been key for the two of you, I'm just curious what you've learned on maybe what's worked and what hasn't worked as you've tried to do that.
We're always, we always keep our eyes and ears open because there's always talent out there, and a lot of times it comes to you when you're not expecting it, and being able to be there for when the opportunity strikes. That's actually paid off for us quite well. And then internally, we always keep our eyes open for that next great leader, that next individual who has a skill set that might be underutilized in their current role, or maybe able to add more to our organization by moving them into another place. And that's paid off big time for us. We've hired a lot of really intelligent young individuals who've they come into one of our entry level analyst roles or analyst program, and next thing we know, they're some of our best leaders at the organization. You just have to kind of keep your eyes and ears open for those opportunities, and not write them off just because necessarily they're so young or new to you. A lot of times they have a lot of great ideas. And then as far as retaining them and attracting outside is, we're kind of known to allow individuals to work within their area pretty freely and openly, to not try to hamstring them into one type of ideal or thought pattern. Let them be creative and kind of run with things, and then offer up the tools to them to be able to kind of explore and devise and build their area out. Within reason, but it's that creativity that we allow has helped us quite a bit. I know banks can be quite stuffy and traditional, as I'm the guy sitting here with a tie and suit on. It's if you step back from that, there's a lot of great thinkers in our industry, and if you just allow them to be unleashed a little bit, allow them to do their thing, and give them a little bit of leash, let them get out there and do their thing. You can find a lot of amazing individuals to work with your institution.
Jay, anything to add to that?
Yeah, I would add, actually, I agree, and I was going to say many of the things Tyler just said. So that's interesting because I think there's maybe a formula to it. But first, I asked kind of like three questions to myself. Do I really believe this organization or opportunity is better for this person than where they're at right now? If I don't really believe that, there's going to be a lot of wasted time. So that's the first question. And sometimes, you have to be honest with yourself and say, the answer is no. It's not better. And if that's the case, I'm not going to get that person, and maybe it's just not the right time, or maybe I have to think about it, because getting really good talent is the whole secret sauce, I think. So now let's say, okay, yes, I really believe this organization, this opportunity is better for this person than where they are because of some assets we have, the business model, the flexibility, whatever it may be. The second thing I'm asking is, why would that person want to work for me? I ask that a lot, because I really do believe people pick their leader more so than the organization. And so if I'm not adding more value to their plate by what they're going to learn, how they're going to grow, the culture we're going to build, then they're not going to choose to work at an organization that I'm leading. And the third thing I ask sometimes to myself is, how can I de-risk this role for the person? Because oftentimes what we're trying to do is, create a startup venture within the bank. That's risky, right? It's not as risky as a startup venture in a startup company, but as a startup venture in an existing bank. And so I have to think about the ideal scenario is say, hey, you get to take this chance, which is fun and exciting, and I've also de-risked it for you by 1, 2, 3, so that it's a superior opportunity for them. And then now just kind of repeating what Tyler said is, I'm always planting seeds. I'm always meeting with people, even sometimes 3, 6 months, 9 months, potentially before I really need it. And then a lot of times it's just waiting, and the best opportunity, when you have really good people at a really good organization, they usually don't leave till something breaks. And when something breaks, there's not enough time to just to meet them and recruit them. So that's why you're planting seeds in advance. And when something breaks, that's the opportunity to bring them over.
Yeah, I love that. So when you have like the right experiments in mind or markets to go after, or this inkling that I think that we at our bank can do something maybe a little bit better or slightly different to get some outsized growth than otherwise, and then you get the right people, oftentimes the next question is the tools, right? What are the tools that are needed to be able to fulfill this need? And I think that at both of your banks, you've kind of run the gamut of developing some tools in-house, going out and licensing tools from other vendors to be able to help you out. And so technology, no doubt, has played a big part in supporting the growth that you've gone about. But how do you look at those decisions of trying to figure out what to do in-house, what to license from other folks, when to cobble things together versus getting just one old big platform that seems like it could do it all? Because more so, those decisions, I think, are in the hands of banks more than have ever been before, just with the accessibility of all the different technology tools that are out there and the talents that's out there.
We usually, as far as trying to decide which path we go down, it really comes down to what makes the most sense for the specific item. And it has evolved as we've grown. When we were just getting up and started, we didn't have a lot of excess cash sitting around to go out and bring in all these some high-priced solutions that kind of do it all. We had to be creative with how we implemented our technology offerings and our products internally to make things run smoothly. I remember back in, it was around 2010, we still weren't that big yet. All our loan files and everything were hard files. It's paper file you go get out of a filing cabinet. And as we were adding more locations, SBA thing was really starting to pick up in conversation, which would potentially have offices in other areas besides St. Louis. And to get a loan file would be tough, to get information out of it. It'd be the old school way of sending it. You have to copy something, send it over either by fax or email. So we worked with a small company who was a client of ours to develop the system that allowed us to image all our documents and our staff to image documents to kind of bring this all, more modernize that whole setup. And it was a long process, took a lot of hours, a lot of individuals coming in after the standard work hours to get it up and running. But eventually we did get it up and running. And it changed the way we were able to operate. Going forward, we had it in place, and it did allow us to be a little bit more less centralized with all our information processing, and allowed us to push out to these LPOs in other areas and branches that we set up in other areas. And then as we grew from there, we have jumped into a few partnerships with other technology firms from products ranging from credit underwriting management systems to escrowing. It's probably have a good half a dozen to dozen relationships right now that are really, it just allows the tools for everybody to kind of do their job, allows us to manage operations, and our state plus the 4 other states where we have LPOs, which are spread out in 3 different time zones, and to do it efficiently.
Yep. Yeah, I love it. Starting small for what's needed at the time, and then figuring out as you go through the journey when it makes appropriate times to go into deeper investments for some of those efficiencies.
Exactly.
That's great. Jay, how about you?
Yeah, when I think it all starts, what are we trying to accomplish, and what's the client need at the end of the day? What are we trying to do? And then just working backwards from that. So there's been examples where often, we're using vendors that are already market leaders or exist. And then there's been times where we'll build our own technology. And the decision is never from a technology first point of view. That's the last. It's always from a strategic point of view and ultimately from a long-term point of view for the client. So take mortgage lending. I get this question a lot. We're one of the largest lenders in Massachusetts, yet almost all of our technology is off the shelf. And so often I get like, I'm surprised, we haven't built our own technology in mortgage lending. The reason is because there are so many amazing vendors in mortgage lending that the real value we add is stitching them all together in a cohesive flow. Now, on the other side, we have this really huge initiative within the bank, like a Client 360 platform, because we're really trying to take a full cohesive view of a client. So we want to be able to know all the products and services they have, when do they call the call center, how did they rate us, their profitability, everything. And when we went out and we looked at all the different vendors that existed out there, including the really big ones in this space, we felt that it was really clunky, it was really expensive, it wasn't going to be long-term enough for us. So we decided actually to build our own Client 360 experience on our own data warehouse. And part of the reason for that is because we have so many different systems that we have to kind of stitch together and glue together and then make work the way we want. So in that case, that is our value add there, our client in the middle. We felt we had to build it. So it's really, what are we trying to accomplish? Where are we going to add value? Not to do a project just because that would be cool or whatever, but how does that fulfill the goal?
Yeah, absolutely. It's funny. I've shared several times that to make fun of both banks as well as fintech companies, say when banks think of innovation, oftentimes it's they go to a conference and they hear of this cool new technology and they say, I'm going to do that. And that's innovative. For a fintech company, the equivalent that I could make fun of is that you have a founder that wakes up one day and says, I had a dream. And the dream is that this product needs to exist in the marketplace. Has anyone asked for it? No. But I dreamed it, so I'm going to make it happen. And I think the truth of the matter is it comes right down to exactly what you were saying, Jay, is start with the end in mind. What is it the customer want? What is it that we're trying to do for them? And then all of those other decisions can be made, as ancillary to that. It strikes me that, banking in general, when you look at the products, are commodities. Mortgage lending, SBA, insurance subsidiary, like even these examples that you all share where you have dove deep to drive some very specific expertise, you're not the only ones in the marketplace that are offering them. So as you have found some great success, just looking at the numbers of the growth that both of you have shared over the years, you have found the success. You found a way to differentiate yourself. What are some learnings that you've got to share with the audience to think about, even in quote unquote commoditized industry with commoditized products? How did you find that differentiation from the other folks in the market that are doing the same thing?
For us, it was I wouldn't necessarily say customization, but understanding. Our team, the SBA side, there's a lot of them. There's a lot of people are touching that market, playing in it, and a lot of people just take applications. You need a small business loan. Here's the application. Fill it out. You get an answer, and X days. Where our lenders and our back office team are, quite frankly, trained to dig in a little bit, take the extra few minutes, the extra time to really look at the credit application. Is this what do they really need this type of thing, or is there a better product underneath the umbrella that would serve them better and be more efficient for their business to allow them to grow for the next several years, rather than something that might tie them up and not necessarily fit perfectly, and in the year from now they're coming back to us with all kinds of issues because the deal didn't make sense in the front end. I think building that reputation helps to attract other business as we go forward. And then additionally, with some of our credit management systems we've put into place, both the way internally how we operate for approvals and how we do our data work management flow, it's allowed us to be quite streamlined compared to a lot of our competitors in the market. So not only are we able to give them a little bit more personalized attention, we can then take that information and move very quickly with it compared to a lot of the other institutions we're competing with, which has given us a great advantage.
Yeah, great. How about you, Jay?
The question was, how do we differentiate? Like, how do we find differentiation, basically?
Yep.
It's a really good question. I mean, we tend to be more of a kind of Salesforce-based go-to-market strategy model. Like we're not doing almost anything direct to consumer, mainly because we've not figured out like how we're going to win that game based on our own capabilities. So everything we do as far as go-to-market starts with relationship managers, loan officers, different salespeople essentially who have relationships and books of business. So then the question becomes, well, why would they want to work for us, or how do we attract those types of people to work for us? Because if you do, then they'll bring the clients. And so then that comes to partly brand, partly process, partly pricing, and then partly longevity. So basically building a platform so that that relationship manager feels like, okay, if I came to Leader Bank, I will close more deals, my clients will be happier, you will be more steady, you'll be more committed, and you will have better service or great service. And so it's kind of building that platform around there. Like I said, having a good reputation and brand and client service culture, having streamlined processes so it's efficient to the clients. And then one I've been talking about more and more lately is longevity. Being able to look that person in the eye and say, hey, we're going to be here a long time. You can tell your client that too, that you're going to be here a long time. That really is a differentiator right now, especially in an era of a lot of M&A.
Yeah. Excellent. So it's always fun and easy to talk about all the great growth that you've had and all the successes that you've had. But I think all of us can really point back that probably our biggest times that we've grown or figured things out is maybe when we missed the mark a little bit. So I'd be curious if you all have any stories that you'd be willing to share. Talk about one time when you took a swing at it and tried some new tactics, and maybe it didn't work out in the way that you were hoping it would, but then what lessons you were able to pull from that.
Yeah, I'd like to say we hit home runs every single time, but that's nowhere near the case. You have to learn from your mistakes. So you get out there and you make the mistakes and you grow from them. We, at one point, several years back, when we were really growing the SBA side of things, thought, we are a commercially focused bank. We're very, geared towards businesses. But, we're missing out on a whole huge segment over here on the consumer side. Let's try to get into this mortgage lending thing, which none of us are mortgage lending specialists. But we thought we could, figure it out along with growing this SBA thing. Going back to focus, it's hard to focus on something when you're trying to learn something at the same time that's totally different from it. It pulls you away, it distracts you. So as we were growing the SBA thing and really building it out, at the same time, we did bring in an individual with knowledge of the market, but the bank leadership, my friend, the board of directors, everybody's focus was on this fast-growing, really nice industry on the SBA side, and we really did not build out and give the proper attention, resources to the mortgage side of things. And after stringing that on for 18 months to 2 years, we just realized, we need to cut it here. This is not our thing at this time, at least. Could be down the road, you never know. But we need to focus predominantly on the commercial side and continue to grow that, especially with this SBA product and any other kind of things that we can build out that is more related to that. We have the internal skill set for already.
Yeah, thank you for sharing that. It does sound like a very powerful lesson for the whole bank there. How about you, Jay?
Yeah, I agree with Tyler. Like our failures, first, I feel like a failure is when the game stops, right? So you're doing an initiative and then I'm pulling the plug. But until then, it's learnings. And I would say all our failures were really failures of commitment, And so we said, okay, let's try this expansion. Let's try this initiative. Let's try this new product. But in our heart of hearts, we didn't ask ourselves, are we committed to this for 10 years? Because if we did, we would have known the answer right then and there. And so as things were getting tough, as things were not working, we pulled the plug. So like, to give you a specific example, we had a really innovative program when rates were rising in mortgages where we're basically going to give a client the ability to like lock a rate to float with us, but know that their rate would never be above X. Okay. Anyways, we didn't really think it through. There was miscommunication throughout the team, and we didn't realize how much volume would come flooding in for this product in like the first week or two. And so we had to shut it off. And there was some reputational damage done to our partners, our centers of influence, my own team, our loan officers. Now, what hurts me about this is such a great product that if we tinkered up with this for 2 or 3 years, this thing would have been amazing. But in that moment, I think we sort of, got a little nervous about the whole thing, pulled the plug, and the damage has been done. I can't really like relaunch it without really changing the story behind it because it's got people think of it a certain way now. So that's just one example. But there's been others where we've we've had as an organization a lot of failures. Usually they're when we're trying to expand and we've hired wrong. And those are also great though, because we have put a habit on of debriefing sort of bad hires and fixing the recruiting process going forward, because I really believe, how we attract, retain talent is basically everything for us. So taking those learnings and passing it forward is really.
Yeah. Well, thank you so much for both of you for sharing those stories. I'd love to at this point call Lexi back as we wrap up this time. We want to have some opportunities for the audience to be able to ask any questions for Tyler and Jay on the topics that we've discussed today.
Perfect. Well, thank you all for the conversation so far. So as Nathan said, you can continue to submit questions using that Q&A box on the right-hand side of your screen, but we do have a few, so we'll go ahead and jump into those now. So one person was curious, what is a new strategy you are excited about trying in the future? Jay, I'll send that to you first.
Right now, I'm really, really excited about this new effort we have, which honestly, we've been tinkering with this process for like 10 years. But basically, since we do so many mortgages, it's basically getting, as many of those mortgage clients as possible to have checking accounts and core relationships with us. And I feel like this idea is always talked about. I've talked about in the past too, but really having all the tools, the processes, and the incentive to make that happen. And I feel like this year we're really starting to crack the code on it. And I think it's potentially the future of our retail strategy. So I'm really pumped about that.
That's awesome. In 10 years in the making, that is quite the project. That's awesome.
Quite the project.
Tyler, what about you?
Very similar in a way. We've been really working on kind of it's almost a package or bundling type system for our commercial clients, especially commercial real estate clients. Do a lot of transactions or have a lot of properties that may have renters or other type of entities. So we're looking at kind of putting together a package that allows them to move all their deposit relationships, all the management of sub accounts, all their kind of the relationship touch points to us to help them with. And then on the back end, we built out such a large commercial real estate business and commercial business outside of all this SBA stuff that we're doing as well, that we can provide the resources, the network. We do these luncheons and kind of I would say lunch and learns, but not really so much learning other than getting together and networking a ton, and then with a little bit of speaking at the end of it. And it allows all these real estate individuals in our market, St. Louis metro area, to come together. They have the tools accessible to them. If they're doing an exchange, we can be in the middle of that. If they're they're looking to build out We have, the contracts. So we're kind of wanting to be a one-stop shop for the commercial real estate relationship.
That's great. And Nathan, I want to also pitch this question to you. I know you're very, very forward-thinking. Z-Suite is always kind of looking at what else they can offer their clients. So is there any new strategies that's on your radar?
Yeah, too many to count, Lexi. But I'll tell you one trend that I'm very, very excited about for the entire industry that I think we definitely dabble in, but it's much bigger than anything we can do just at Z-Suite. And it's this idea of the second wave of digital transformation. So kind of that first wave of digital transformation was this idea that first it was consumers and now it's businesses can self-serve. Instead of having to go to the bank, instead of having to get on the phone, they could get onto online banking or mobile banking, check their balance, take action, open up accounts online, all that stuff. And I think that's great. And we still have a long way to go there, specifically on the commercial side. But the second wave we're starting to see come in, and that's to eliminate dual entry banking, where right now you're working with a commercial customer and they are managing their business in their ERP system. In some sort of software package, they're managing their business on a day-to-day basis. And then while doing that, they then have to go over to the bank to move the money or to reconcile things or to do whatever it is. So it's awesome that they can now self-serve, or they're starting to be able to self-serve to do that themselves. But how can we actually eliminate the necessity for them to have to go over to the bank or have to go from the bank over to their ERP system to have these two systems communicate? And I think there's a lot of fabulously interesting things that we're going to be able to unlock as we embrace kind of that second wave of digital transformation.
Yeah, no, I agree. And I think this next question kind of ties in, or I'd be interested to see how it does tie in, if it does. And that is, are you using AI in any of your current strategies? If so, how are you using it? And maybe too, for some of these forward-looking strategies, how does AI play in? Tyler, do you want to take that first?
We are really just now starting to research and see how it plays into everything. We actually had some meetings last week with other banks in the Missouri area to kind of get our feet, kind of get a better grasp of it and how it's, what it's going to allow us to do. There's a ton of potential. We see so many ways we could eventually integrate it into our, internal systems to better understand our numbers, our metrics, to get out there and ask, have it do the legwork on telling us where we are, so it frees up our decision makers to make actual decisions on a day-to-day basis. There's a lot of opportunity there. We haven't jumped into anything yet. We just got to really understand it better before we do it. But it is coming, and it's coming fast.
Jay, what about you and LeaderBank?
Right now, like we haven't, with the client in mind and working backwards, we haven't seen or come up with the idea where AI is going to be at the top of our project list to achieve that. However, I would say I'm sure the majority of our fintech vendors have AI as part of their strategy in making their processes more efficient. And obviously, when those are launched, those are going to come back right into our process.
Nathan, do you have anything to add there in the conversation of AI?
Yeah, I think the big way that we're looking at it at Z-Suite is we're not an AI company, we're an escrow and sub-accounting company, but we will use AI as one of the tools at our disposal to be able to get the most out of everything that we do. The metaphor I like to use is, imagine being an accountant when Excel was invented. Everybody's like, oh, how can you trust this machine to do all your calculations, right? Well, you're still in charge of your spreadsheet. You're still in charge of the formulas that you write. But when you get it right, it's going to be way more efficient. And that's the way that we're looking at AI, it's the next form of a tool set that we have available to help us do it. So we just have tons of experiments that we're doing. Our favorite one right now, and our CTO actually just did a presentation on it, is we have to answer due diligence requests all the time from banks, both our current clients as well as our prospects. But all of y'all like to ask these questions in slightly different ways, even though they're the exact same questions. But I have to fill out your form. I can't just give you kind of our form answers. And so we took all of our due diligence information. We have like 256 pages of due diligence information. We uploaded into a database, and we've been training the system to be able to answer these due diligence requests. Right now, I have to have my security architect read all the questions, look up the information, and type it, trying to figure out what goes in. We can actually just run it through the system. And like I said, humans still are in charge of the output, so they still read all of the responses, but it's making our turnaround times extremely short, right? So we're just looking at it in that particular way.
Yeah, no, that's, I mean, a really great use case that you're using right now. So this touches on something I think that you all talked about earlier in regards to the board and how you present some of this new information, but someone had asked, how have you convinced other stakeholders to commit to these strategies? I know who wants to tackle that first.
We just, as far as getting the other stakeholders involved, it was really just talking through things. I think more than anything else, we know what we're looking to do. We kind of have a rough plan coming together, and then you go to the individuals who may, who are going to be touching this. It's the directors, the other executive team members, the day-to-day managers, the staff, and get their input and their feedback back into the whole process. So when you build it out, their voices are heard. I think if an individual knows that their voice is heard, voice is contributed towards something, then it is more likely for them to embrace and adopt it and have their buy-in.
I would add to it, like, the quality of your team, right? It's not just your peers and the people in the organization that are more junior, but it is also the board. And I think having those honest conversations about, like, is everyone on the board the right person? And what can you do to affect alignment and a shared purpose? So I think a high performing organization basically is a whole cohesive thing. And if you have the right people in all the right seats, then it's more about doing the prep work to explain what you're trying to achieve and why that's beneficial in the long term. And if you see an opportunity and you've done the work and you've built the business model and you've thought about the risks, and it's not a permanent decision, because rarely anything is anyways, and you can kind of explain how you could de-risk this decision if it went badly, try to make it so that it's almost hard to say no to. And I think when I failed before, it's like I'm trying to make something way too big. Like, okay, all we're talking about right now is we want to just like do this one small little thing. And then, you know what? I'll come back next month and tell you how it went. That's it. Because sometimes you make a decision or an initiative like too huge. I think that is something that happens in banking anyway. So just trying to reduce the friction on it.
Yeah, the only other thing that I would add to what Tyler and Jay shared, and everyone on my team has heard me say it before, a ta-da moment in business is never a good idea. So what I mean by that, think about when you were a little kid and like you went and you practiced like a dance or a play or whatever it was, and then you come out and you do it and you go ta-da, and then what are you waiting for? You're waiting for everyone to applaud and say this is amazing and lift you up on the shoulders and stuff like that. I guarantee you that if in a business, whether it's a bank or a fintech or whatever else, if you're going to get in front of your employee base, you're going to get in front of your board or whoever it is, and you have that anticipation of, ooh, I'm about to unveil this amazing thing and I'm going to go ta-da, don't do that presentation. Stop for a second and go have some one-off conversations with people. Say, hey, I'm thinking about maybe doing this. Can we talk about that for a little bit so I can get some of your input? Like, take people along the process with you at all times. There's no reason to have a surprise or a ta-da moment. If you're going to present it to the company or to the board, what you should have is a lot of nodding moments. Like, yep, well, I talked to Jay the other day and he shared that for this particular thing, we were going to do this. So we incorporated that feedback. I talked to Tyler the next day and he had his suggestion here that we did this. And so because of all of that, we've come together and we want to take this, this step forward. And everyone's going, yep, he had that conversation with me. Yep, he had that conversation with me. Yep, I was able to put in my input there. And typically you're going to get a lot more buy-in, a lot more support, and as well as a lot more trust. And trust me, I know this because I've done my fair share of ta-da moments and, got the reaction of, what are you talking about? And why would you ever do that?
No, I think that's a good kind of stop and check moment of, will this be a big surprise? And, I think maybe last question before we wrap, I know we had talked about commitment and situations where, the plug had to be pulled earlier. How long do you all typically try strategies before you make a decision on committing to them? What does that process look like? Jay?
I've had strategies where we've pulled the plug in 6 months, and I've had some strategies that we've been playing with, like I said, for 10 years. And so I think, if you're doing a strategy and it's like good customer service, I don't have an ROI calculator on, I don't have like a ton of KPIs to justify if we did this, we're going to get better customer service or not. That's just like core to who we are. We want to get better every year. And that'll be like, that's a 22-year ongoing strategy of differentiation. And so if you can look at your organization and say, like, this is core to who we are, I think you're onto something. If you look at a strategy and you're like, well, if that doesn't go well, I'm going to have to abandon it. That's where I think you're starting to maybe do something you're not fully committed to. Because I think all the hard stuff that really adds value, they're long. Like you gotta like get a little bit better every year. Nothing is so easy that like you can just try it and in 3 or 6 months it's a home run.
Great point. Tyler, do you have anything to add?
I'd just say for us, it's, each project's specific on how long we'll let it go along. But for us, it's kind of two sides. What's potential of the project and what's the progress? If there's still a lot of potential there and there's still progress being made, we'll keep going with it. But once we see either of those two things fade, then that's when we really start considering to pull the plug on it and move to something else that has more potential and looks like we can make more progress on it.
Yeah, and one of the things I've seen people miss quite a bit when they're trying new things is they say, let's try it. And then that's it. That's the end of the conversation. They go and try it. And I encourage everybody to say, let's try it. And in 3 months, we're going to see how it's doing, and here are the metrics that we're going to be checking to see how it worked. And it could be a very clear metric, or it could be we feel good about it. Doesn't matter what it is, but if you have to have clear checkpoints anytime you try to do an experiment, because otherwise it's not an experiment. Like if you don't have we're going to do it for this long and then we're going to stop and observe what happened, then you lack the definition of what you're trying to do, which is that experimentation.
I think that's great. Well, I want to thank you, Nathan, Tyler, and Jay, for your comments today and participating. As a reminder to everyone signed on, you will receive this recorded version of the webinar within 24 hours, and this will also be posted to bankdirector.com for you to go back and watch at a later date. So again, thank you to Z Suite Technologies for co-hosting today's webinar. I thank you all for joining us, and I hope everyone has a great rest of their day.
Thank you.
Thank you.